morning, all. I'm Epstein with your Morning Flash Update. And this update is for Valentine's Day. Happy Valentine's Day, everyone. The 14th of February, 2024, 8:10 a.m. Central Time, and what a different day. Instead of the market panicking, a correction, and that's all that it was. Is it a one-day flash? Don't know that yet. But I do think that the markets can come up a little bit and then try to probably go down and work around. But you can see you're up 100 points in the NASDAQ, up 115 in the Dow, 23 higher in the S&P. Do we have any news that's moving the market? We'll come back to this in a minute. No, the mortgage market index numbers, well, I don't know that they even mean anything. They were down 2.3% in the index itself, down 2.5% in the purchase, and down 2.1% in the refi. We're going to get Chicago Fed President Goolsbee speaking this morning. The reason I'm even mentioning this, he's the first one out of the box, if you will, to speak about the CPI number. So we'll see what the heck he has to say. Lyft, remember I was yesterday evening telling you it went up 67% at its peak. And I said either a short squeeze, that's what I thought it was. And I still think it was. What happened was Lyft put out a press release and put an extra digit on a profit margin, that they're looking for it to go up 50 basis points. Instead, they put 500. The market read that, and it went bananas. And I'm watching it, and I'm going, is somebody caught? This is aftermarket. What's going on? And you could see what it did. It's a stock that went basically from $12 to over $20, and now it's back down to $14. But will that get the regulators' attention? You can count on it. It's not fraud. It's a clerical mistake. But is it worth slapping a wrist, a hand, and all? For sure. Okay? How much money was lost because of that? That's their fault. Somebody or some people didn't do this right, and it should have gone through many chains before it was released. Instead, they released an extra zero. Okay. So one of the things that I was talking about yesterday to you was corrections. And I said, it's normal to get a 3 to 5% correction. You haven't even gotten that. By the end of the day, you were down in most of the major stock indices 1.5%. So it was a break. Because you're so high, the numbers get big. But 1.5% in a day where the market saw CPI numbers that didn't fare out well, got to be careful. You're going to get PPI this Friday. You're going to get in the energy markets. We saw yesterday OPEC come out, and they are counting on oil prices with demand increasing because China's going to see their economy get better. I don't see that at this point. They're counting on rate cuts by the Fed, maybe. Okay, I saw Mohamed Al-Arian today, and I think he hit it on the head. And normally, he's not one of my favorites, but he was very good on this. And he pointed out something that I'm going to share with you, and I think he's right on the money. The Fed has done the right thing of being data dependent this whole way through. Now it's got to take that, not just the data, the visionary part of it, as Mohamed said, and he's right on this. And you've got to start looking forward and saying, at what point, because of the lag effect, do I have to get ahead of the game instead of where we're at so that I don't tip this market over? In other words, what the Fed doesn't want to cause is a recession. I don't think we're going to have one. I think that we can get inflation to come down with a restrictive policy. I think we can get unemployment to rise a little bit. And I don't think you have to get what they call a recession. Could you get what's called a soft landing? That depends on your definition of a soft landing. Do I think we're going to see the economy cool a little? I do. The next thing that you've got to keep your eye on are currency markets probably, because it might be a race to the bottom. I write, and I got up to, frankly, I haven't been asleep. I don't know why. I tried to sleep last night and I couldn't do it. So I got up about 2:30 and I started writing. And I was watching the numbers come out of England, Finland, Romania, Poland, Hungary. And they are all coming down in terms of inflation, but many of the economies that count on Germany are getting hurt. So is this going to be a race by the ECB instead of a June move on it, maybe earlier because the economies are weakening so much? Grain markets, I'm going to warn people, high dollar, increased crops coming from South America soon. Not the thing that you normally look for to get too bullish there. Bonds and notes, if this is all they can bounce, got a problem here. You're already around 431 in the 10-year note. So not only do I give my comments like you're hearing right now, but at our group, Linn, we write all day long. So you're getting emails. If you get our charting software, the research pops up there, but it's all kinds of research. And you can tailor it for what you want for a trial to see it. We don't sell it. You have to have really a trading account with us in order to get our research. But we want to show you the purpose as to why you'd want one with us and how to go about it. We cover all these markets in the futures, and of course they matter a lot to what's going on the ETF and the stock side of things. So how do you get all this? It's simple. You go to our website at iraepstein.com, and when you go to free offers, you'll not only see this, but many of our other products. Move your cursor to the top here. You'll see that. You can go to iraepstein.com, free offers, but there'll be an icon at the top there. And if you have questions, call my staff. I'm Ira. I'll catch up with you at the end of the day. I'm hoping to take a nap before then. You take care.